I've started recording. Today is going to be the last day of this class. For those that have been asking about my mentorship, I think I'll talk about it lastly here. And so if you have questions for me, let me know in the comment section. It will be well for you to unmute your mic and ask your questions, or raise your hand first before you unmute your mics. That is the way we do it. That is the way we have been doing it. So today I'm just going to round up everything we've talked about on how to refine yourself as a beginner, as a not beginner now, as a amateur or as an amateur forex trader. Let me start sharing my screen right now. Please start asking your question. If you have questions, let me know ASAP in the comments, or you can raise up your hand if you want to speak. I'm sharing my screen right now. Okay, in the absence of any comments, probably the comments will come in, or questions will come in for me when we start or when we continue. So to refine everything that I've spoken about for the past 2 days as a trader in the forex markets, today I'll be talking about trading journal and trading plan. But let me start with the trading aspects, right? Let's say you're a forex trader. You've already known the basics. You've known how to spot demand and supply. You've known how to set all these liquidity inducements and so on and so forth, right? You are good with everything, but you want to refine. You want to have this edge. You want to have the edge. Let me tell you, the edge is not your strategy. But let me quickly recap what I explained yesterday and some days ago. And 2 days ago, I was talking about liquidity and inducements yesterday. And then day before, I was talking about what was I talking about? How to identify something. I was talking about how to identify, probably, I really can't remember now, but I was talking about how to identify something. So that is for those, that is for everyone, but especially for those that are confused that, okay, I just finished a beginner's class, I'm a newbie, but I need to, proceed. I need to continue my journey as an amateur forex trader, becoming a professional forex trader. All you have to do, you've already known how to do your draw your supply and demand zone. Then the best analysis strategy that I'll give you is to use daily time frame. Look for demand and supply, probably demand and supply, let's say like this, on the daily time frame, right? That will be your analysis. And then on the smaller time frame, like the 1 hour time frame, you use what? Your order flow to enter as the daily demand zone. You understand? So I've given you a hint like that for the newbie traders that are just coming in and might be confused that, okay, what is this guy's purpose of this class? Now, to combine everything that I've been teaching you, I've taught you guys how to identify demand and supply zones, and I've taught you guys how to identify order flow in relation to demand and supply zones. And now I've also taught you guys how to identify liquidity and inducements to spice up your demand and supply zones. So combining everything together, your analysis should be on the daily time frame. Okay, so let's use this as an example quick. So let me quickly use this one. Let me just use an example here, though that was not the bias or the reason for the trade. So let's say you're analyzing on the daily time frame, right? I'm looking for something different. Okay, so let's say you are doing your analysis now, right? I hope price will be able to go back to January. I don't think so. So let's focus on what we have here. So now, from what I've taught you guys want to analyze the market now, right? You are inside the market, you want to take trades, you want to analyze, do this and that. This is a practical example. So let's go to the daily time frame. Let's say you are seeing the structure like this and you want to take a trade, right? You have seen the trade. So this is just hindsight, not like this is what we call back test, right? Sorry about that. Now this is a break of structure, right? And now we already know that there's a supply zone somewhere here. So where is the supply zone? The supply zone is this candle, right? That is the supply zone. Then you want to look for an entry on the 1 hour time frame, right? Or the smaller time frame, let's say the 30 minutes time frame, because you are coming from the daily time frame. Combining everything I've taught you guys now. You can see I'm trying to combine it. So for me, you can see that this zone is very big, right? You really don't know where the price might sell off from. So sometimes I always use the half of the zone, which is always nice. So I always use half of the zone for the point of interest. Like let's go back to the daily. Okay, let's go back to the daily time frame. I would love to use half of the zone. So we can have a nice target. Then we move to the smaller time frame, let's say the 30 minutes time frame. So look for entry confirmation, right? So it's still like the analysis I explained yesterday, but this is more clean now. Okay, this is more reasonable, right? So now on the 30 minutes time frame, what do you also want to look for? You want to look for another supply zone, right? Then for the entry. Okay, so where is the supply zone? This is the break of structure. Obviously this is the break of structure. And where is the supply zone? Where is the supply zone? This is the supply zone, right? This is the supply zone. So I'll use this. Yes, this is the supply zone. So seeing your supply zone with what I taught you guys yesterday, what is this? This is inducement, right? So you are using it to confirm that supply zone. Okay, so you can see that you've combined everything that I've taught you guys together now. Okay, then that will be the entry. Okay, and then you set your sell limit pending order on the middle, because I love to use the middle a lot, like that. And look at what happened, right? This is 92 pips, and then you are done, just like that. This was a beautiful trade. Okay, I also took this trade, so this is a very beautiful trade. So combining everything that I've taught you guys, right? Combining everything that I've taught you guys, this is what you get, right? Beautiful setup, inducement, but there's no liquidity, right? There's no liquidity, and there you go. Okay, so that is literally it on everything that I was explaining yesterday and 2 days ago or 3 days ago. Now moving to the trading journal and trading plan. Trading journal and trading plan. So what is a trading plan? A trading plan is a set of rules that guides you before you enter a trade. That is trading plan. Trading plan is a set of rules that guides you before you enter a trade. So how should a trading plan look like, and what can a trading plan consist of? Trading plan can consist of, or should consist of, your trading strategy, of course. Then your trading plan should have the templates of what pairs do you want to trade. You should not trade all the forex pairs. As you know, there's a lot of currency pairs, so you pick the ones you want to trade, probably 1 or 2 or 3 or 4, like that. For me, I'm trading a lot because there's a reason to that. That is one of your trading plan. Second trading plan is, when do you enter the market? Is it during the London session, Asian session, or the New York session? That is part of the trading plan. Then another thing that should be in trading plan is, what do you want to see before you enter the trade? Do you want to see a supply and demand on the 1 hour, or a supply and demand on the daily, or a supply and demand and inducements, or a supply and demand and divergence, or a supply only, or a demand only? You must have something you want to see before you enter the trade. That should be part of what is inside your trading plan. That should be part, very, very important. Then you should have your risk management plan. How much are you risking per trade? Is it 1% or 0.5% or 2% or 3%? Very important. So for me, I think that there was a beautiful trade I took here on Euro JPY today. So my stop loss was 10 pips, and I risked I think 1%. I risked 1%. I risked 1%, and my risk to reward is 1:3. I don't do more than that. 1:3. That is my risk to reward. You understand? So these are important things. What do you want to see before you enter the trade? Your risk management plan, your trade management plan, your risk to reward ratio, and what is the exit plan? Do you close at break even, or you close at full profits, or how do you wish to close your trades? Is very, very important. So that is what your trading plan should consist of. Okay. Let me try to write this down. What your trading plan should consist of, or let me just show you what I showed my students. I hope there are no links here. Okay, so this is how your trading plan should be like, right? Know the type of trader you are. Do you want to hold trade for a long time? Do you want to scalp, or do you want to swing? That is very important. Know your time frame. Don't jump from different time frame because your friend is using it. For example, I don't use 30 minutes time frame for analysis. I only use it to refine the zones I draw. So you should know the type of time frame you are using for your analysis. Know your entry plan. Like I told you guys, entry plan is very, very important. What must you see before entering the markets? Do you want to see a demand zone, or do you want to see a demand and supply, or do you want to see just a demand? You want to see just a supply? So these things are very, very important. Know your entry plan. Know what you want to see before you enter the market. Also know your exit plan. Do you intend on locking profits? What the fuck was that? Do you intend on holding to UTP? Do you want to break even? Do you want to close partial? So this is also very important, and you must be consistent with your trading plan. Not like today you follow your trading plan, tomorrow you don't follow your trading plan, next tomorrow you don't follow your trading plan. It's bad. So you must be consistent with your trading plan every day. So know the trading sessions you trade. This was what I said earlier. Do you trade, for example, I don't trade Asian session? Yes, no matter how beautiful the setup may seem, even though I sleep late. Yes, I don't trade. Your trading plan must be your trading plan. If you say do not trade one lot, it means you must not trade one lot. Your trading plan should be what will guide you. That will be your key to consistency. It will help you. It must have everything you need to do, everything you need to see before you enter a market trade. So know how many pairs you are trading. I said this before too. Are you trading one pair, two pairs, three pairs, four pairs, and so on? Never break your trading rules. They are easier said than done. Remember, they are easier said than done. It's one of the hardest things as a trader to keep your trading plan, especially the entry part. Exactly, because it's very difficult to keep your trading plan, especially when you want to enter. Because sometimes when you want to enter the markets, it will show you some kind of entries that market is ready to buy, but it might just be a trap. Then once you fall for that trap, it's your stop loss, and you're like, oh my god, why didn't I just follow my trading plan? And it's always very painful. Sometimes it will play out and you're like, thank god I didn't follow my trading plan, blah blah blah. But the day to eat you hard, it's going to eat you hard. So it's always good to follow your trading plan and be consistent with it no matter what, even in the day of losses. So sometimes you just want to enter the market, you have to follow the entry plan in your trading plan. Sometimes when you break your trading plan, you make profits, but if you continue with that attitude, you won't go far. That is just it, because sometimes when you break your trading plan, sometimes you might make profits. That's the market for you. But when you feel like, I didn't follow my trading plan today, tomorrow I'm not going to follow my trading plan. When you continue with that consistent bad habits, trust me, it won't help you as a trader. It won't help you at all. So it's very, very important. Always follow your trading plan, no matter what. No matter what. It is very, very important. It is very, very important. If you have questions, let me know. Just drop it in the comments or raise up your hand. So I have 43 minutes here, and I don't think I'll use up to 43 minutes. And then lastly, I'm going to be talking about trading journal. Let me see if I dropped something for my students on trading journal. Let me see. Okay, I didn't drop anything in my trading journal. Probably I dropped it, but I didn't pin this down. So your trading journal should be like a diary of all your trades: the date you took the trade, the assets you traded, did you take a buy or sell, why did you take a buy or sell, and the profits you made. Let me write this one down for those that will be watching the recording. Okay, so trading journal should have the following. Number 1, dates. 2, the assets you traded. 3, did you take a buy or sell? I'll tell you the importance of trading journal now. Then 4th one, did you make profit or loss? The 5th one, why did you enter the trade? Then the 6th one, how much you made. Yeah, let me make this a little bit bigger. Yes. So trading journal should consist of the following: dates. This is very important in case you want to come back to your trading view to check the trade. You understand? Then the assets, also to track it, right? Maybe you want to check Euro USD, GBP USD, Euro card, and so on and so forth. You just check the assets and look at the date, trace it. Now, did you take a buy or sell? This is important also because when you are journaling, you need to see the buy trade you took and the sell trade you took. Which one gave you profits most? Is it the buy trades? Is it the sell trades? What time? Time should be there too. Time. Like I said, you should already have a time that you are trading. All the time should be the same thing. Probably London session or New York session. Okay, London session or New York session. This is also very, very important because some strategies would play out well during the London and not play out during the New York, while some will play out during the New York or play out during the London. But when you are journaling, you'll see the trade that entered profits more in a session. Probably those trade you took entered profits well during the London. That means most of the time you should be trading London session. Or if all the trade you profited gave you what profits during New York session, then that means you should be looking out for what New York session. You can see that all these things are very, very important. Then same thing for the loss. If there's a loss, check when did I make the loss? Is it London or New York? If you have streaks of losses during the New York session, you already know that you want to avoid the New York session. Or if you made the loss during the London session, you already know that you want to avoid trading during the London session. This is why trading journal is important, because you might not remember everything on your head. You understand? You might not remember everything on your head. Then the 5th one is very, very important. Why you enter the trade. This one should be according to something that is in your trading plan. Must be according to something that is in your trading plan. Why did you enter the trade? I entered the trade because there was a breakout and retest. I entered the trade because I saw liquidity. I entered the trade because I saw demand and supply. Or I entered the trade because there was inducement on my supply zone, and then I entered the trade. You know, there should be a reason for taking that beautiful trade. Either a profit or loss. Either profit or loss. Then also how much you made, because this will help you psychologically, especially when you make profits and even when you make loss. When you make profits, when you write it down, you see that, wow, I've made this amount of money. That might be the highest amount of money you made in that month. When you write it down, you're like, wow, I'm proud of myself. And when you're also looking at the loss, you're looking at the loss that, okay, this loss, is it more than the profits? If there is a loss that is more than the profits, you should know that there's a problem, because that means you are not following a consistent lot size rule. You understand? That means you're not following the consistent lot size rule. So that is very, very important. So make sure you put how much money you've made. Then, like I said, put the session there. Do you trade this during the London session or during the New York session? That is the work of trading journal, and this is what it should contain. It should be in Excel format. Okay. Now, another thing for trading journal, You review your trading journal at night when you're about to sleep, not when you are trading. When you are trading, you only write you only fill the trading journal, right? You fill the trading journal when you are trading. But before you sleep, you review the trading journal, because this is what I do. This is what I used to do when I used to have a trading journal, but now I don't have a trading journal because everything is in my head, and all my charts, all my profits, all my losses, they are on the charts over here. You can see, so I don't really delete them. So, but as a newbie, you should know, you should have a trading journal because it helps you to recognize patterns. So as I was saying, you should review your trading journal at night whenever you wake up, whenever you are about to sleep. When you're about to sleep, check your trading journal, right? You look at everything. Did I make profits today? Why did I make profits? You check it. Why did you enter the trade? You check it. How much did I make? You check it. Did I trade during the London or check it? London or New York? You check it. Now you look at the loss. Why did I make a loss? You check it. It's not like when you make profits, you check only profits. Or when you make loss, you check only loss. It's very important. When you make profits, you look at it. When you make loss, you look at it, not avoiding the loss. That this loss, no, I don't want to look at the loss. I don't want to look at the loss, because everybody does that, and most people will still do that even after watching this video. So a sub to the channel would be very beautiful as you are watching this video, for those that will be watching the recording. So you should check why you make profits and why you made loss. Not like you check only profits and be looking at all your profit and smiling but ignore the loss. It won't help you. Then after that, recognize the pattern. There will be a pattern. There will definitely be a pattern. There will definitely be a pattern, right? Check all your profits. Check why you entered. Okay, I made profits because I took a trade on demand zone and there was inducements. I made profits because there was inducements. I made profits because I entered with a demand zone. I made profits because I entered with a supply zone. Now there's a pattern, right? Because your profit pattern is you are entering with what? Demand, supply, inducement. Demand, supply, inducement. Then when you check your loss too, check your loss. Okay, why did I make a loss? I made a loss because I didn't wait for a break of structure, or I made a loss because I didn't see the divergence, or I made a loss because I didn't wait for the right time frame. You understand? So at that point, you can see that the losing pattern is because of your ignorance. You understand? It's because of your ignorance, and then you need to work on all those, and then you make it your strength. Because me, I had a losing problem before, which was impatience. Whenever I see trades, I want to jump in. Whenever I see trades, oh my god, I want to trade, I want to enter the market. But when I wrote down my trading journal, I was like, okay, I shouldn't lose, but I lost because I was not patient. I should have waited for the right time. So why not wait and make money instead of rushing? You understand? So I try to kill the spirit of impatience in my life. I try to kill that spirit that no, I must be patient. I must be patient. And since then, because that was my losing pattern. But if I didn't check my trading journal, I'll just think I was losing because of some things I didn't do right or something. But when I saw my trading journal, I was like, oh, I shouldn't have lost this trade, but I entered too early. I shouldn't have lost this trade, but I entered that New York session. I should have waited for London session. I should have waited for this session. You understand? I noticed that my losing pattern was based on all just impatience, not waiting for the right time. So that is very, very important. So I have just few people on this call. Okay. Any questions for me? Any questions? Ends in 33 minutes. Probably in 15 minutes or 10 minutes I should be done. So any questions for me? For those that have been asking about my mentorship, this is my mentorship group. Like I told you guys, I send beautiful trade setups here. These are trades that I take by myself. So I always send every single setups, either winning or losing setups. Or this was the one I showed you guys in today's class and yesterday's class. This was GBP USD that I showed you guys. It was the GBP USD I showed you guys. Okay, this one was a losing trade. So we had beautiful, where there's always you know, an weekend classes are also held. But I don't think the person that asked about mentorship is around, but probably would watch the video. Okay.
I'm around, boss, so I think I will chat to you private.
Okay, okay, okay.
Yes, boss.
All right. So I think I'll send more details on that to the group. So any more general questions? Because but I don't think you guys should have questions because I think I've satisfied you people, but not everyone has joined, so I really can't say. I really can't say. But
Boss, sorry, my question goes like this. I don't really understand about this liquidity.
okay, so you said you don't really understand liquidity.
Yes, and how?
Okay, so let me explain liquidity one more time since you said you don't understand liquidity. Like I always say, liquidity is money, and wherever there's money in the forex market, there's eyes there. All right. So where do you get money in the forex market? Money is literally where there is a lot of buyers or sellers on a zone, right? More like a ranging market, right? Like this. There's a lot of sellers here. There's a lot of sellers here, and there's a lot of sellers here. So at this point, there's liquidity here. Somebody please mute your mic. So at this point, everybody wants to sell here, right? Everybody wants to sell here. Everybody wants to sell here. Why? Because that is a selling point of interest, and it has shown that it is a selling zone in the markets, right? That is an area of liquidity because there's a lot of sellers there, and there's a lot of people that are looking to sell from there. So that is why we call it liquidity. So instead of trading like this, we then use the what we call supply and demand, because this is a supply zone here, right? So instead of trading inside that liquidity, you trade on the supply zone like that. That would be more reasonable because we believe that the market makers would take all everybody's money, eat their stop loss, and move. You understand? So assuming it was here, just everybody's stop loss would be somewhere here, right? It would eat their stop loss and move. But if you are using the supply zone, it would eat the supply zone instead. Take everybody's money from this supply, from this resistance because of the liquidity, too much of sellers, and then it will sell off. You understand? So that is literally liquidity. Same thing for buy too. Same thing for buy too. So that is liquidity. Liquidity is money, and money in the forex market is literally where there's a lot of buyers or where there's a lot of sellers. In this scenario, there's a lot of sellers, so there's money here because more people will be looking at this as a resistance zone, and they're looking to sell from this resistance zone. And also, we believe that as SMC traders or smart money traders, we believe that the banks are also looking at this place to take out liquidity here, to take out all the money here, hit their stop loss, and move in the desired direction. So that is the belief, that is the psychology behind liquidity. So there are also ways to there are also liquidity in there's also what we call internal and external range liquidity, but I'm not I don't trade that because I don't believe in that, so I don't trade that. But there's something we call internal and external range liquidity. There are other ways of seeing liquidity. Yeah, there's other ways of seeing liquidity, but I'll just be explaining this one because I don't really use all those other forms of liquidity. But literally, you get the idea of liquidity now. Liquidity is money. Money is where there's influx of sellers or buyers. I believe I'm clear on that.
Thank you, boss. I understand.
All right, you're welcome. We've spent 30 minutes already. Any more questions? Okay, so in the absence of any questions, I think that will be all for now, guys. I'll drop the recording for those that didn't come. I'll drop the recording for those that didn't come. And yeah, you get the recording soon, probably. Or someone trying to speak. You get the recording probably tomorrow. Let me just say tomorrow. So that will be all for now, guys. Peace.